I think the key here is to maintain a globally diversified portfolio. That really isn't a different concept. Maybe you move a little bit away from some of the economically sensitive sectors if you are worried about trade. Obviously, you see the semiconductor space taking it on the chin. They're very sensitive to trade. You may want to move a little bit into healthcare type stocks if you are worried about volatility. They tend to be a very good space when you see a pickup in volatility. So maybe some portfolio transitioning, but nothing dramatic.
So is it reduction in technology, particularly semiconductors? If you do that and you raise capital, you sell, you raise cash. What do you do with that cash?
Well, you could simply keep it in cash. There is yield there now. You also could move into...
I mean, a cat's hair whisker of yield.
Well, yes, of course. But the intermediate term investment grade bonds, there's now a little bit less interest rate risk involved with bonds because the Fed is on the sidelines. So you can get a little bit better return. Also, it's one of the portfolio, volatility dampeners in a portfolio. So it does make sense to have some exposure to bonds if you don't have that in your overweight equities.
Do you think the gains for the year have been made?
Our target on the S&P 500, it's not set by me, it's set by Tobias Lefkovich, is 2850. So if you go by that prospect, then yes.
Then they have been. Yeah, and we know Tobias very well, obviously a well-known name to all the CNBC viewers out there. If that's the case, is this now an environment of return of capital, not return on capital? Just kind of hold the ship, hold the line for the rest of the year?
I think that may be accurate. I mean, I think ultimately the stock market continues to move higher from here over the next year or two. I don't think that, this is the end of this cycle. So I think that's the most important factor. Does it matter exactly on December 31st where stocks are? Probably not. To me, it's more of a long-term prospect, and I think you can stay invested. I think that's the more important point. I would not be surprised to see more volatility in the back half of this year. Growth expectations might be a little bit too high. I think the composition of growth looks a little bit weaker than most are saying. I also think earnings expectations might be a little bit too high. So we might see a little bit of a sell-off later in the year.
As a guy that I know pretty well says, there's always a bull market somewhere. What does Citi Personal Wealth see as undervalued? There's got to be some opportunity out there somewhere.
Yeah, well, we've been beating the drum on healthcare. That was one of underperformers.
The only sector that has done, I think the technical term is squat the last year.
Yes, it is definitely underperformed, but at the same time, you want to buy stocks when they're cheap, right? And if you are expecting spike in volatility later this year, maybe that's a good position to be in. Also, emerging Asia, if the trade tensions do die down, this might be an opportunity to pick up some more shares there while they're on sale.